Guys, good morning. Happy Monday to everybody. Let me know how we're doing here on audio in the chat. Then we shall be good to go here. So keep in mind, we got a short week this week. The market will be closed on Thursday for Thanksgiving, and then on Black Friday, I think we got a half day. So the market should close around 1 p.m. on Friday. And I am going to keep myself at home. No Black Friday shopping for me. Hey, Jason. Hey, Amelia. All right, we're good to go. So keep that in mind. Short week. It could be low volume. It could be low volatility. It could be pretty lame. Doesn't mean it has to be, but at least take that into consideration. But taking a look at the market in terms of last week's price action, and we talked about this in detail in yesterday's video, pretty much a chop fest here for your S&P 500. And really what's happening here is there's definitely some distribution and selling pressure in a few different sectors and a few different indexes. You can't quite see that last week if you're looking at the S&P 500. Reason being is your Apples, your Amazons, Tesla towards the end of the week, really heavily weighted stocks, is they're making those big moves. At the very least, it keeps the ship afloat here as far as the S&P 500 goes. But something that my dad, who's been trading and investing for a long time, but he kind of looks at religiously, is the RSP. So this is your equal weighted index. So it's your S&P 500, but every stock is equal, meaning your Apples, your Amazons, those behemoths aren't taking up a good chunk here. So while your S&P is pretty much flatlined last week, in terms of collectively across the board, a little bit of distribution here. Now, the RSP doesn't look bearish. There's still stacked EMAs. You closed, just barely under your 21 EMA. But it's a worthwhile observation just to say, at this point, the breadth is kind of narrowing pretty much into semiconductors and your big tech stocks. You can see the Qs are up about 0.5% here this morning. So you look at your small cap index, the IWM, some pretty steady selling pressure there last week. The Dow Jones, the always exciting Dow, a little bit of selling pressure there last week. So needless to say, as retail traders, none of us in this chat combined are ever going to have enough money. This is just a reality, right? We are never going to have enough money to come in here and move Amazon ourselves, or to move an Apple, or to move a Tesla. In other words, for us to catch the price action we need to make money, we need to follow the big money. So looking at the RSP here, then looking at the Qs, etc., it could change this week, but at least as of right now, this is where the big money is going. Your Amazons, your Apples, your Teslas, your Googles. Then you look at the semiconductors. They're on fire as well. AMD, NVIDIA. So that's pretty much where your cash is going right now. As long as that's the case, that's what I'm going to focus on. The difficulty, so to say, with a lot of this is, we're pretty extended here. But that is going to continue to be the focus. A few weeks ago, my opinion was, wow, everything here is looking pretty good. It's not just technology. It's not just the semiconductors. Energy had a great daily squeeze. Then your histogram starts to shift as far as bearish momentum, and you're down, 4% on Friday, breaking your daily 50. Definitely a little bit of distribution there for your financial sector. Are you looking daily squeeze? This closes under the 50. Now, the good news potentially for a lot of us is we already got positions in the big FANG stocks. So this is going to keep being on the focus here. Here's how you got to look at it, though. So with Apple's weekly squeeze, I think into the end of the year, into early January, you could see 165, 170. So we'll just take 175, 170 rather, because that sounds attractive. But here's kind of a simple mentality as a swing trader. You're looking for a move from point A, 160-ish, to point B, 170. Now your job is just to pick your spots wisely. So I'm pretty confident here that Apple is going to go from point A to point B. It doesn't mean that move doesn't unfold without a couple of flushes or a little bit of consolidation. So the difficulty of building a position up here is you have to be willing to sit through a flush all the way down to 155 at the 8 EMA. because that doesn't change anything as far as how bullish Apple looks. It's just uncomfortable for you because you took a crappy entry, in my opinion. I think if you're getting long up here, you shouldn't even get shaken out on a move to the 21 EMA. To take it a step further, I don't even think you want to get shaken out on a move down to the 50 simple. So it's kind of tough to work an entry at this point unless you're just totally willing to sit through that kind of flush. And you can take smaller positions, right? You can scale into a trade. You can give it plenty of time to expiration. There are a few things you can do to make that a little bit more bearable, but that has to be your mentality. If you didn't do your job and you didn't get Apple back here at the buy zone, just understand you take this entry up here, you might sit through a pretty unpleasant pullback. So it's easy for a lot of traders to say, okay, here's a weekly squeeze, a 3-day squeeze, a daily squeeze. They can see the move that's going to unfold. Your typical retail trader never catches that move because they're taking entries up here, then they're getting shaken out and they're chasing it again. So I think a little bit tough here to work good entries. Where are we going to open up? 160, 150. In other words, you wait for a flush here if you happen to get it. Same exact game plan here for Amazon. Daily, 3-day, weekly, monthly squeeze. I don't think you get long up here unless you're going to comfortably sit through a flush down to the 8, down to the 21. And if things really get sketchy here, all the way down to the 50. In terms of the structure of the weekly squeeze, which this is what I think is going to drive the bus here, you got to sit through that flush. But I think into the end of the year, into January, good old weekly squeeze fires here, 3,900 to 4,000 is kind of my target. So we're at point A right now, as we're trading around 36.80. So here's point A. I'm looking for a move into point B, 3,900 to 4,000. But in terms of trying to profit on that move, this just isn't the spot I'm trying to take my initial position or really add to a position. Because if you can do that back here a little bit closer to the buy zone, you're already sitting on profits now. So maybe scale out of your profits, but I think even better, if Amazon comes in a little bit this week, you're still profitable. Versus you chase Amazon, you get long up here, a little bit painful. So I think Amazon is poised for a big move here. It's just a matter of where can you work a good entry. And I think that gets a little difficult up here, 3 ATR. On a brighter side, though, Netflix is nowhere near as extended. I think equally a good trend, plenty of bullish momentum, and you got a daily squeeze, but you're trading right near the buy zone. We're going to open up around 680 this morning. So we're going to open up kind of flat. Netflix is, I think, one you could build an entry now, where Amazon, Apple, probably to your benefit to wait for a little bit of a dip. So I think Netflix looks good. And if we do come into the 21, probably going to look to add to the current positions here, which has got about 25 days left till expiration. So here's our position from the options room, 650, 645 credit spread. I'd probably add to that position. So grab the options room a little bit more. And then for those of you in the mastery, probably just take that same trade because we already got the 620, 615. But you want to find an uptrend, you want to find a squeeze, then you want to try to find an entry as close to the 21 EMA as possible. Can't do that in Apple right now, can't do that in Amazon. You can do that here in Netflix. So I think that one looks pretty solid. And to finish it up here as far as my major focus, Tesla. Pretty straightforward. Right? Kind of, mastering the trade, chapters 1 and 2. Build up energy in a squeeze at the 21. Release energy, in this instance, in a pretty ridiculous move. Reversion to the mean. This is where you're looking to get long again for that next push into 2 to 3 ATR. Now, where are we going to open up? Because, let's see, 1166. Yeah, really can't suggest a good entry right here. So when I say this, it's like, hey, I don't think this is the best entry. I don't think it's the best entry if you're going to get punked out. So you're getting long up here at 1170, and then you're getting shaken out on a dip to the 21. To me, it just doesn't make any sense. Anytime we're at 2 to 3 ATR, you already have to accept there's a growing probability behind the scenes we're going to pull back to the 21. But then you have to understand that that dip to the 21 EMA, you take that 40,000 foot view here, it doesn't change anything as far as the structure of that trend. So you can get long Tesla here. I just think don't get punked out if we flush a little bit. As long as it still has structure, I'd take this thing down to the 50. That's how bullish I think Tesla is. So keep that in mind. That's more so what I mean. You could get long wherever you want. To me, it just doesn't make too much sense if you're going to quote unquote chase it a little bit to get shaken out on that buyable dip. All that being said, though, I think Tesla here gearing up for a move back towards, you just pick big round numbers with this thing, and then we're just knocking through them one by one. So 1,200, 1,250, 1,300. It's kind of what I'm looking for here. But when you have a stock and just crazy strong like Tesla, when you get those little, short-lived periods of ugly selling pressure, first question we got to ask ourselves is, has anything changed? Has the structure of the daily chart changed? The 3-day chart, the weekly chart? Have we lost our stacked DMAs? Did we lose our green 10x bars? If all you do is pull back to the 21, then you find support, you still have stacked DMAs, you still have green 10x bars, it's the same bullish trend it was 10 days ago. Now you're just getting an opportunity to build, I think, an entry that makes a little bit more sense. So we are rocking with December 17th expiration. And I don't got enough exposure here, so I definitely want a bit more. 30-point gap up doesn't quite help as far as trying to build a new position. But we have 10, 20, 10, 10, December 17th credit spreads. And we got like 10% of max profit. So Netflix, a little bit more workable here. Tesla's starting to kind of get away from you, I think. Apple and Amazon, definitely pretty extended. So extended does not mean they don't continue to go higher. Extended just means if you're building your position here, strap on tight and hold on through that flush, so long as the structure of the trend doesn't change. Tesla's kind of the perfect example here. If you might be getting long at 1190, then you sit through a pretty nasty flush, but nothing changed here. It's still a really bullish trend. And ideally, that's a pullback you want to buy. So that's my major focus here, y'all. And again, to me, this just makes the most sense because that's where the money is going. Could change today, could change this week. But as of right now, that's where I think as far as setups goes, you get a lot of good-looking setups. And that's where the cash, as far as the big money, is flushing into. So it's going to be my focus here. A few things that came up on the scans this weekend. Transports are decently interesting. Big time push out of the daily squeeze. Reversion to the mean. Nothing changed. You dip to your 21. You have a brand new daily squeeze. Still got a bunch of bullish momentum. You still have stacked DMAs. So maybe not immediately. But if this turns into a 4 to 5 to 6 day daily squeeze, then I think that daily squeeze potentially takes you back towards the upside. Also coming up in the scan results are the top 2 holdings for the transports. UPS with basically the same exact setup. Big push, reversion to the mean, brand new daily squeeze. And then you have UMP. Very similar structure. So that's decent. Definitely good looking setups there. Then you have NUE, which has a weekly, a 3-day, a daily, a 4-hour. It's just squeezing like nobody's business. There's nothing bad I can say about this one. And I really do like the weekly squeeze. I'll show you that real quick. Because she is a looker. Why does Thinkorswim have to suck so much? To me, this is a thing of beauty here. Nice push, reversion to the mean. Nice push, reversion to the mean. Brand new weekly squeeze. Stacked DMAs. 10x bars. Green. Really bullish. and you got plenty of time before earnings. So I'm a fan of that bad boy. What else came up this weekend? HubSpot, HUBS, decent trend, decent daily squeeze. So couldn't fault you if you had a little bit of that. And what else do we have here? NOW keeps coming up in the scan results. My only gripe with NOW right now, actually, I don't have any gripe with NOW. Oh no, here we go. Little shift in momentum here. So think of XLE, think of XLF. Two good-looking daily squeezes I think we had discussed here a few times. But as a daily histogram goes red, they ultimately kind of fire to the downside, or close enough to fire into the downside. So you got a great trend here. You got a good structure. I'm just going to hold off until there's a bit more momentum working in my favor. As far as stacked EMAs, as far as green 10X bars goes, if we look at a 5-minute chart here, everything's pretty neutral. So under the surface, you're not building up all kinds of bullish momentum on every time frame. And then I think we do have to take into consideration the daily histogram is shifting a little bit. All that being said, it's a good trend, so I think your 50 SMA should hold. So if you got a flush there, I'd kind of take it from there. But if momentum starts to shift back towards the upside, then I'm all about taking a swing here for a push back into a new high. You got to be patient, though. The question at this point is, does this trend continue? And I think you start to trade under your 50, at least in the short term, it's a little bit at jeopardy. But you do want to be patient. Daily squeeze fires in the direction of the trend. Daily squeeze fires in the direction of the trend. Daily squeeze fires in the direction of the trend. To be determined. But make that observation. The daily squeeze is just a buildup of energy. Right? It's that compression phase. You want bullish momentum in your buildup of energy to give you a better chance of catching the release of energy to the upside. So daily squeeze, positive histogram, nice move. Daily squeeze, this is kind of where we're at right now. You look for that shift back towards positive momentum. Daily squeeze fires. So decent structure. One I'm kind of interested in here is coin. So let's see. We IPO'd back, was that April? So it's kind of a rookie here. Only been around for 6 or 7 months. What I do like is big push out of this daily squeeze back here. Good bullish histogram. Reversion to the mean. Brand new daily squeeze. Stacked DMAs. Green 10X bars everywhere. I'm kind of looking at this as saying, hey, big move here, right? Talking a big game. If this stock finally is going to go into a bit of a trend, it shouldn't end up back under the 50. Bullish stocks just don't go under the 50 and stay under the 50. So if we're really going to get into a groove here, with this big push from 260 to 360, that's a big time move. If that kind of starts, kicking off trend mode here, it doesn't mean you rally immediately. It does mean, though, the institutions, they should come in and protect that at the 50. You end up back under the 50, I think it continues to be a bit of a dud here. So what I'm thinking is kind of place a bet that it stays above the 50. The question is, can I get a good risk reward? A good bang for my buckaroo? And then my target here, 380, 400, right around 3 ATR. So here's the question. Could a trade be structured here where we're getting a good risk reward and we're getting a good bang for our buck if we do make a move into 380, 385? But at the same time, if this goes against me and ends up coming down under the 50, what's that loss going to look like? So probably go out to January because I don't like being concerned with trades during Christmas. So where's that 50? Which should continue to rise here. We're right around 285, so I'm going to call it 295, 290. Give me just a second here, y'all. The hell? Sell vertical. Maybe just go 295. Let's see. All right, so good risk reward. 295 short put. Buy the 295 as protection. Just about a 2-to-1 risk reward ratio. Right? So we'll look at this on one contract. Uno contracto. Best case scenario, you're making 160 bucks. Worst case scenario, you're losing 340. And you make your 160 so long as we close above 295 at expiration. So, that's best case scenario, worst case scenario on paper. My bigger question is, if this trade doesn't work, what's my loss going to look like? Ideally, I want to put this on as a 2-to-1 risk reward ratio, but then I want to manage it in a fashion where if this doesn't work, I'm losing about 160 bucks, ideally a little bit less. In other words, trying to make it closer to a 1-to-1 risk reward ratio. So let's take a gander here at this. Let's see, analyze trade. 295, 290. So let's say by next Friday's expiration, Chandler's birthday, December 3rd. Let's make sure we got the right expiration date. All right, cool. So let's say by next Friday, we caught the move we're looking for. Trade works really quick. We're up here at 375, 380. Out of our $160 max profit, what are we looking at up there? You're up about 100 bucks. So you're giving this trade plenty of time. But even in the event this works for you really quickly, that's 60-ish, maybe 70% of max profit, somewhere in that neighborhood. So I think it offers a good bang for your buck, even though you're giving it all the time in the world here, and even if the move happens immediately. The bigger question is if we come down and start breaking that 50, which I think around December 3rd, this will have risen a few bucks here. Rose? This will have rose a few bucks. Call it 295. We're down here at 295. And theoretically, we're down about 100 bucks. So this is right up my alley. This is kind of like a 1-to-1 risk reward ratio. We got to put up 360 bucks to open the trade. So that's our max loss, of course. $160 max profit. But if my line in the sand into December 3rd is a close under the 50, take it down even to like 290, take it down even to 285 here, we're still not down the 160 bucks. That happens around 275. So that's my goal, all said and done, trying to manage it closer to a 1-to-1 risk reward ratio. Pretty doable here. So that's kind of what I'm thinking. A trade I can comfortably sit through a flush all the way down to the 50 on. Because if you end up coming down here and breaking the 50, coin flip is kind of looking like a bit of a dud in the short term. But if that move does unfold, still going to walk away with a good chunk of my max profit. So that's kind of what I'm thinking here. Simple trade. It's not going to take too much capital. It's not going to take up too much of your attention. I would actually just set an alert down here at the 50. And then generally speaking, kind of ignore the thing. In the market environment, at some point, it's going to change. We're not going to be in this crazy uptrend. But when your market is in an uptrend, you risk 5% of your account on something like this. Trade works in your favor. You're taking home about 2%. 50 of those a year, handful of those per month, that alone can really equal up to a lot of good progress. That's what I got for y'all, though. Amazon, Apple, Tesla, Netflix, Coinbase, rather. Coin, you're at the buy zone. Netflix, you're closer to the buy zone. Tesla, you're not too far away from the buy zone. Apple and Amazon here, little bit extendo. But that's going to be my primary focus into the end of the year, into January, and pretty much until something changes here. So let's see. Let's do this, y'all. Let's actually, you know what? No, I'm not even going to run scans here. There's no point. So let me get caught up in the chat. See what y'all got. Take a look at some chart requests. Y'all should be ready for the open here. Dustin, the blue arrows, that's what you're referring to? Netflix had some blue arrows a couple weeks back here. No, oh, there you go. Can't really discuss exactly what it is. But if y'all ever see the blue arrows on my charts, it just means at that moment in time, the stock has the ultimate combination, in my opinion, of course. It's got the ultimate combination of trend, structure, and momentum. So there's green 10x bars everywhere. There's some trend characteristics, few different criteria. Jill, I would agree in terms of UPS there. And what I have to like about it, at least for now, it's number 1 or number 2 in the IYT. And maybe the transports just roll over from here. But I mean, that's a big time move. You pull back to where you should pull back to. This brand new daily squeeze, maybe not immediately, but put it this way, if this trend is going to continue from here, this is my favorite pitch. Pull back to the 21, brand new daily squeeze, still got stacked DMAs and green 10x bars, so everything is still intact. You look for that squeeze to fire for the next push higher. There's a good little rhyme. In UPS, looks pretty much poised to do the same thing. I'm going to have to check this one out as far as premium. But I would agree, Jill. There's the flush you need. Everything is still structured really nicely. What do we have for bigger squeezes here? Just the daily. Good stuff on UPS, though. I do like it. So One Star Inc. in terms of Google, great call out. I'll give you big picture, and then I'll give you what could trigger the big picture. The big picture here is your 3-day squeeze, which is quite the beaut. Quite the beaut here. Now, if I was doing my job, right, so shame on me, but if I was doing my job, I would have been long Google back here. At the 21 EMA inside the 3-day squeeze. Regardless, though, it still hasn't fired to the upside. It kind of looks like it's poised to do so. So there's your bigger picture kind of gas tank as far as what could give you a good few weeks of momentum. What I'm really liking here early in the, early this morning. Now, where are we going to open up? Let's see, 29.90. But I like your 4-hour squeeze here. I think that's really solid. And it might not fire immediately. But in terms of trying to dial down to a lower time frame to find a good entry in the pursuit of getting position for that weekly, for the 3-day squeeze, I love the 4-hour here. We'll have to see this week, y'all. Could be a bit of a lame week. There's certainly the potential. We're basically going to get robbed of a day and a half worth of price action this week. So the hedge fund titans of the world, they might be out at the Hamptons sipping on cocktails. Who knows? But ultimately, if it's not this week, maybe it's next week. Until this 4-hour squeeze loses structure to the downside, I would look at that as a pretty good entry for the continued push here. So I really like that 4-hour. I think it's all you got. But very, very nice. Let's see. 2-hour chart. So you can work with this. There's a little bit, there's a lot of edge here. So what we're trying to do is you want to, The corny analogy I like to use is you're trying to build a cake of probabilities. In other words, you're just trying to stack one layer of probability on top of another layer of probability. You want to stack that to the moon. So the first layer of probability here, as far as, hey, why focus on Google? We're in an uptrend. There's layer of probability number one. Number two, FANG stocks are kind of the leadership here. So there's number two. Number three is your 3-day squeeze. You're going to try to get positioned here for a big release of energy. And then, from another perspective, come on, daily chart. Come on, daily chart. You're not crazy extended like Apple and Amazon are. You're a little bit closer to your daily 21. And then you have multiple layers of edge with your 4-hour, 2-hour, 1-hour, 30-minute, 15-minute squeeze. That to me makes so much more sense. And let me get long Amazon up here at plus 3 ATR with no squeeze on any time frame to be found. Now, I think they're both going to move much higher into December, January. But our job is to work good entries. So maybe you can't get some Apple here. Maybe you can't get some Amazon here. But the birds of the feather should flock together. Meaning, Google's in an uptrend. It has a daily 3-day squeeze. It's a FANG stock. It's probably going to pull an Amazon or an Apple relatively soon. It's just offering you a much better entry right now. So don't get too concerned with, playing Pokemon. I got to catch Apple. I got to catch Amazon. I got to catch Google, Microsoft, Nvidia, Tesla. Here's how I actually suggest you look at it. My opinion here is we're trying to catch a group move. We're trying to catch the continuation higher in the FANG stocks, in the tech stocks. And I have this opinion because of the weekly squeeze here for the QQQ. So for conversation's sake, if this works as advertised, and this continues to fire along here for another 2, 3, 4 weeks, what you want to judge yourself on, all said and done, is not whether, it's not whether or not you traded every single tech stock. It's more so, did you take advantage of that push? Is the weekly squeeze in the Qs here fires long? There's your plate of opportunity that might last for 4, 5, 6 weeks to go out there, pick your spots wisely in whatever big FANG stock you can. So 4 weeks from now, if you crush it on Google because Google offered a better entry, and you crush it on Netflix because Netflix offered a better entry, you shouldn't care if you got Apple. You shouldn't care if you got Amazon. Understand they're all basically going to move here, not because there's Apple news. Right? This has nothing to do with the Apple car. It's got nothing to do with whatever Amazon's doing. It's because of this weekly squeeze right here in the basket. Hopefully that makes sense. All right, guys, let's keep going through the comments here. Angela, Facebook, Mackie D's, and real estate. How are we doing on time here? All right, we got 10 minutes, y'all, so we'll rapid fire. Real estate, let's take a peek. The slow charts here isn't helping us. Definitely not helping our case. Oh, come on. Good looking daily squeeze, Angela. The question at this point, so here's what I would actually watch RSP. Because like we discussed earlier, seemingly all the cash is just flushing into like 3 or 4 stocks here. Doesn't mean the money comes out of real estate, but that's what you got to take into consideration right now. The market is, heavily favoring throwing all their capital at a handful of names. All that being said, though, this is a good daily squeeze. Be patient with it given the context of, again, where the cash is flowing to right now. But I do think you got a good daily squeeze here. And I would go look at some of the top holdings in the group. I say this because there was a lot in the scan results this weekend, and they do look pretty sharp. From another perspective, if your 3-day squeeze works as advertised here, there's what it does when it works as advertised. So I think real estate's a good structure overall. For Facebook here, MetaPlatformsIncorporated.com. My only knock against it, and you know me, Ange, No stacked DMAs. Aside from that, though, I would believe you bottomed out here. Complete shift in momentum on your histogram. Good shift there to your 10x bars. The only question remaining is you're back above the 21 EMA. You know, Angela, I might actually look at this one today. It's not that Apple weekly squeeze. It's not Amazon. It's not coiled up here with bullish momentum from head to toe. But it basically got knocked on its butt and has done a really good job here of getting back on its own 2 feet and dusting itself off. Thinking into the end of December, thinking into January, not a terrible spot here to slowly start to build a swing position. Back above your weekly 21, there's your shift of momentum. It could end up being a bit of a chop fest here, but I would argue the selling pressure is done and over with. So a put credit spread here I think would make a lot of sense. It might not be ready to rally back to the highs, but with your shift of momentum, getting back above a few key moving averages here, I don't think you come back down towards 310. So from that regard, I do like it there. I think the put credit spread, though, would be the trade. That way, if it needs another week or two to kind of build up more momentum, you can comfortably sit through some of that. But there's your full shift, right? The full round trip. Bearish momentum, exhaustion of your bearish momentum, reintroduction of bullish momentum. I think it's bottomed out there, so I think if you can give your swing some decent time, not a bad looking spot. And then last one here, Mickey D's. Let's look at McDougal's here. Good uptrend. You're back at the 21 EMA. No daily squeeze just yet. So you're looking for, you're looking for a 4-hour or 2-hour. 21 EMA is going to be your launching pad. If you can get a series of squeezes on lower time frames, they could send you back towards the highs there. So I think McDonald's looks pretty solid. All right, guys. Good morning to everybody. Yeah, and Shay, good morning. Sorry if I butchered your name, but yes, Tesla is doing Tesla things. And Facebook, I would agree with you as well, is looking pretty solid. Are we getting stock split rumors for Tesla? Gotta love it. Stock split, get back to $1,000. Stock split, get back to $1,000. It's probably just going to be the trend that takes us into eternity here. All right, we looked at Google. Biden is reappointing Powell. Let's see, does the market dislike that? If that's the case here. Everything's looking just okay. Jason, FTNT. TNT. What could I say bad about it? That's probably going to be the tougher thing to do here. Great looking daily squeeze, Jason. Let's check the weekly chart. Good weekly trend. Your daily squeeze is right on top of your weekly 8. Not a bad spot to look for continuation at all. Let's see. What do we got on the 3-day chart here? Anything? Yep, and you got a 3-day. I like it, Jason. Trend, structure, momentum. Those are the 3 things you're looking to incorporate, I think, into every swing trade. And you got all 3 here, so I think it looks very solid. Very solid. Mike, in terms of, that's a good question. So in terms into the buy-sell signals on the 10x bars, put it this way, it's another layer of probability tool. So all I've noticed is that when I find a daily squeeze and the 10x bars are all yellow, it just tends to be a bit more of a chop fest. When those 10x bars are dominantly red, then those squeezes have the tendency to try to at least shake folks out or fire to the downside. But when you have green 10x bars basically from head to toe, doesn't mean, of course, the squeeze has to fire to the upside. I'm just looking for that additional layer of edge. And what I found over time is it is a nice additional layer of edge. It's not the end all be all, but I have found it incredibly helpful. So, at this point, it's a tool I incorporate in every trade. 10x bars are red, like NOW. Because here's the goal with you want to find a couple different indicators, and none of them really is the end all be all. But here's the power in an indicator. If you have a few good ones in your arsenal, you don't have to think anymore. And that's my biggest thing as a trader. I just don't want to do too much thinking. I don't really want to carry an opinion. I want to be able to look at a chart and look at a few of my tools, and in a matter of a second say this is a short, it's a long, or it's one I'm going to be patient with. So as soon as I look at NOW, I notice a negative histogram. Then I'm going to do my momentum check from a weekly chart down to a 5-minute. How are the 10x bars looking? And if they're all green, I'm probably trying to get long immediately. If they're all more so yellow and neutral, I'm just going to hold off for now. So to me, that's kind of the importance of that tool. It gets me into good trades. More importantly, it keeps me out of a lot of things that otherwise might need more time and just might turn into a bit of a headache. We're doing pretty good on time here. Mohammed's got J&J. Let's see, J&J. Negative histogram, negatively stacked DMAs, neutral 10x bars. So I wouldn't go long Johnson & Johnson based on that. Probably something I would do nothing with. And I always got to preface all this by saying, I'm just one guy looking for one setup. I promise you there's another trader out there, a very successful trader, mind you, who probably is looking at Johnson & Johnson this morning, and it's their go-to pitch. Right? It's the setup, it's the trade that they've gotten wealthy on. You just got to find that. That's the key. So if I don't like something, it's just because my little checklist doesn't add up here. If your checklist adds up, then you got something to work with. But under the weekly 21, no stack DMAs, etc., I wouldn't short it here. I would just do nothing with it for now. Ooh, Palo Alto calls. Palo has been squeezing forever. I think finally trying to get something going. Come on, Palo. Yeah, beautiful weekly trend. Yeah, I think you're kind of off to the races here. Let's see. Not quite off to the races just yet, but everything's lined up. Positive histogram, stacked DMAs, good uptrend. So I think Palo looks pretty sharp here. Yeah, and K for that coin vertical, something like 295, 290. The spread's not the best, but you pick that up for $1.50, you're coming in there close to a 2-to-1 risk-reward ratio. But here's how I mentally manage this trade if I take it. Put the trade on, I get my fill, I set an alert under the 50. So I come down here, I'd set an alert under the 50. I'd set an alert back here at resistance. And then to the extent I can, which is difficult, being in the training rooms and stuff, but then to the extent I can, just going to ignore this thing. It either ultimately fires to the upside and gives me a quick profit. It chops endlessly, and I collect some slow premium. Or it's a total bust and it comes down here and blows through the 50. But anything in between, I wouldn't want to get too concerned with. All right, guys, I think we got through everything there, though. So we are off to the races. Give you a quick look at things on my end, and then I'll cut you loose. And I don't have the open today in the options room. I'm pretty sure. They would be looking for me. Yeah, Amazon. You got to wait for a dip, I think. Or you strap on tight and you be comfortable sitting through a flush. The Big Apple here up another 1%. Just, yeah, extended. I think you got another, $8 in the tank here, all said and done. But I would imagine you get a better entry at some point. Let's see, Netflix, well-behaved child here. Just kind of chopping near that 21 EMA. So something you could work an entry on. You're in the buy zone. And then freaking Tesla. I had this cute idea. I'll take a half position on Friday. I'll take my next half on Monday, and we're gapping on up there. Coin is going to be nice and flat, which I appreciate. But good prep session this morning, y'all. So see what today brings. And you got a short week, so keep that in mind. But I hope I've given y'all a few things to take into consideration this morning. As always, I appreciate you spending a good, almost an hour here this morning. Good stuff. So enjoy the rest of your day. I will see you again Wednesday morning, same time, same channel, and I will talk to y'all then. Appreciate your time as always.